Good morning, this is Al Vickery at AL Waters Capital in Braintree, Massachusetts. This is Friday, your morning call for April 8th, 2011. Now, we don't have a whole lot going on in terms of the equity markets. They've been a little flat lately, frankly. The small moves of 20 or 30 points, even less yesterday. Traders are really just trying to find some direction. We've had some positive things in terms of economic data, including yesterday. The initial jobless claims came down by about 10,000. Continue to see some growth in the Western economies, certainly still plenty of growth in Asia and some other emerging markets. But that's really not enough to tip traders one way or the other from where we're at right now. What is happening, though, is we obviously have some inflation concerns, mostly driven by energy costs. Oil jumped again this morning up above $111. And gold, by the way, also added another $12 up to 1,470. 1500's right around the corner. So these things are actually more telling and have more of an impact on what's going on elsewhere. We'll start with oil. Traders seem to think that oil should be maybe 85 to $90 based on supply and demand. From there, we have 20 to $25 added on in what is called a risk premium based on what's going on in the Middle East. Now, you might think that daily developments in Libya and some of these other hotspots, could worsen or could get better. And on the brighter side, maybe oil will suddenly pull back to that 85 to $90 range. But you have to also consider uh, everything is dating back really even to Egypt is still very unresolved. Um, the primary problem in the Middle East obviously has been unrest against dictatorships, basically, many of which have been in power 20, 30, 40 years. Even if you suddenly had a decision by all of these leaders to just walk away, you're looking at a very long process for democracy to take root in any of these nations. Things haven't suddenly turned around in Egypt or Tunisia. Libya could take some time. So we could be looking at a very long process. So back to oil, that could also be a very long process of higher oil prices, which again are going to very much impact economic growth, consumer sentiment, basically one and the same. And the International Monetary Fund says we could very easily see the records we reached in 2008 of $147 a barrel. A lot of oil traders expect it to be at least above 130 towards the second half of this year. So you have to expect that that's going to have a major impact on the economic recovery. Gold is reacting because oil is feeding into consumer prices, which has led inflation higher. The European Central Bank raised its interest rate by a quarter point yesterday. Bank of England has decided thus far not to, but maybe before the end of the year follow suit. Federal Reserve still dragging its feet on interest rates, determined that the energy prices feeding into inflation aren't a clear indicator that it's time to raise rates, so they've been a little slow. So what's everybody doing? They're running to gold. 1470 this morning, much higher to go. People just don't have a whole lot of faith in the dollar or many other currencies. They may move relative to each other, but the general feeling is that a couple of years of printing and dropping money out of helicopters, as they say, to fix the Western economies is eventually going to lead us to a problem. So 1500 is just the next stopping point. From there, there's still room to go, quite honestly. So trade in gold, trade in oil and energy, and wait this out. And we'll see you again. Happy trading and have a good weekend. Thank you.